Today, I asked my jinni to explain the fascinating 37-year journey of the Indian stock market, how it evolved from a modest beginning to becoming a powerhouse of investment and economic growth. Let's dive into this story together, exploring key milestones and the transformation that shaped modern India's financial landscape.
Let's talk about the stock market. You know, for a lot of us, just hearing that phrase can be kind of intimidating, right? It brings to mind all these complicated charts and a language that feels like it's from another planet. It often seems like a place of super high risk and a lot of anxiety.
I mean, you've seen headlines like this, haven't you? They're everywhere, and they are absolutely designed to grab your attention, usually by making you feel just a little bit scared.
And then, bam, you see a number like this. 2 lakh crore, just gone, wiped out. It's enough to make anyone think, is this whole thing just a big, sophisticated casino? And you know what? That's a totally fair question. It's the very thing that keeps so many people from even getting started. So in this explainer, we're going to dig into that exact question. We're going to look at the entire journey of the Indian market to see if we can find an answer. Okay, so first things first, that fear, it's not totally out of nowhere. The market can be a seriously wild ride. I mean, just look back at the history. The market's taken some massive hits. Back in '92, you had the Harsh Mehta scam that just blew things up, a 43% crash. Then the Kargil War in '99, a lot of foreign investors just pulled their money and ran. And the 2008 global financial crisis, oof, that was a brutal one. The Sensex got cut by more than half. And of course, the one we all remember so clearly. Yeah, the COVID-19 lockdown in March 2020. The market just plummeted. A gut-wrenching 40% drop. If you were invested back then, I mean, it was a terrifying time. It really felt like the entire floor had just dropped out from under the economy. So yeah, if you only look at these moments of crisis, the picture looks pretty awful, right? But that's kind of like judging a whole movie by only watching the jump scares. So let's do this. Let's zoom out and look at the entire 37-year story. So what happens when we ignore all that daily noise, all the scary headlines, and just look at the long-term picture? Well, get this. Since it all started back in 1986, when the Sensex was at just 100 points, it has grown over 660 times. No, that is not a typo. A 660-fold increase. It's just staggering. And this chart just lays it all out, doesn't it? It only took 4 years to get to 1,000. And yeah, despite all those crashes we just talked about, the overall direction has been just up, relentlessly up, crossing 66,000 in 2023. So here's the big takeaway. While the downturns are scary and they are real, the long-term story has been one of absolutely incredible growth. Okay, a rising Sensex is great and all, but what does that actually mean for you, for the individual investor? Well, it means you have the chance to find what people in the biz call multibaggers. So what the heck is a multibagger? It's just a fancy term for a stock that explodes in value, growing to multiple times what you originally paid for it. We're talking about companies that are true game changers. And finding one of these, well, that's how real life-altering wealth gets built. Let's make this real. Let's talk about Infosys. So between 95 and 2020, the Sensex itself grew at a respectable 9% a year. But Infosys? It grew at an unbelievable 30% per year, compounded. If you had invested in them way back in 95, you would have earned 688 times your money by 2020. Just think about that. And this is where we get to the real magic trick of investing, compounding. It's simply about your money making money, and then that money making even more money. Let's break it down with Divis Labs. Imagine back in 2003, you put in 14,000 rupees and got 100 shares. A few years go by, the company splits its shares. Your 100 shares magically become 500. Then they issue bonus shares. Twice. Each time it doubles your holdings. So, all of a sudden, your original 100 shares have morphed into 2,000 shares, and you didn't have to invest a single extra rupee. And by 2023, that little 14,000 rupee investment was worth over 70 lakh rupees. That is the insane power of compounding. Okay, as awesome as those stories are, we've got to be real here. It's not all sunshine and rainbows. For every massive wealth creator like an Infosys or a Bajaj Finance, there's a flip side, the value destroyers, companies whose stocks just tanked. This isn't a lottery where every ticket is a winner. You got to do your homework. So after hearing all that, seeing the massive potential, you might be thinking, all right, I'm ready. Where do I sign up? But hold on a second. Before you jump in, it's super important to take a look in the mirror and make sure your own financial house is in order first.
So let's run through a quick personal checklist. Do you have an emergency fund set aside? Something to cover you if life throws a curveball? How's your debt situation? Is it under control? Do you actually budget your money? What about insurance, like health and life insurance? And maybe the most important question, do you honestly have the time to learn about all this stuff? If you're answering no to these, the advice from our sources is pretty clear. Maybe it's better to wait. The market's not going anywhere. It'll be here when you're truly ready.
But if you are ready, then the single biggest lesson from the market's entire 37-year history is this. You have to think long-term. This isn't about getting rich quick. It's about building wealth, brick by brick, over decades.
You know, the master himself, Warren Buffett, said it best. His whole philosophy is buy a stock thinking you're going to hold it forever. It's about believing in the actual business, not just obsessing over the little squiggly line of the stock price every day. And Buffett's own teacher, the brilliant Benjamin Graham, gave us this piece of wisdom. This is all about the psychology of it all. See, the best time to buy is often when everyone else is freaking out and selling. And the most dangerous time, it's when everyone's giddy and thinks the market can only go up. It takes some serious guts to go against the herd. In this last quote really brings everything full circle, right back to square one. Before you can even think about investing, you have to save. Making money is one thing, but knowing how to save it and put it to work for you, that's a whole different ballgame.
So there you have it. The Indian stock market's journey has been absolutely incredible. It's been volatile, it's been scary at times, but at the end of the day, it's been massively rewarding. Going from just 100 points to over 66,000, it's a true story of navigating fear to find fortune. And that really leaves just one question, and it's a personal one for you. Now that you've seen its journey, what will yours be?